So the reason or the background for this webinar is that a new version of the management of risk framework has been released. It's not that different from the old one, but there are a few
Kenny, I have muted you. Yeah, all good.
Okay. I have no idea what you missed, but what I was saying is that a few enhancements to the framework has been added, and in the new version, the version 4, the first one you'll notice is that it's not just about management of the risk, it's actually about creating and protecting value. And this value term is something that is quite at the core of the whole framework, and is also something that plays a part in how we look at risk. So risk is not only related to, for instance, projects or programs, it's an enterprise perspective, and it's also about not only protecting you against unforeseen threats, but also about how you protect your total value, both in terms of the monetary value, but also on a more sustainable level. So also the people and basically the planet part, but we'll get back to that. So the purpose of today's webinar is, of course, to introduce you to the framework, and we will not be diving very deep into the framework. We have courses for that, so it's just to give you a flavor or a taste of what the framework is about and what the different elements of the framework is. We'll also have a very brief look on what does this new approach mean in terms of the exams format and things like that, because a few things have changed on that as well. And then I'll finish up by some observations from real life. So how is it to implement a framework like this in real life, and also what observations do I have when using a more structured risk management approach. If we take a look at the practitioner guideline or the framework, the methodology has been around since 2004. It has been through a couple of iterations. The latest version here is still part of a globalized or globally recognized framework. It's compliant with ISO standards. So this version has been put a bit closer towards the ISO standards, and therefore also I am sharing something, Thomas. Can you not see my screen? Just a quick check. Can everyone see the screen?
I see your screen, Kenny.
Okay, great. Thanks. It's the old the old days and Teams. It's always like what? Yeah. Anyone not see it? Okay, good. Let's continue. So the practitioner framework is still globally oriented, and it's even more in the new version, more aligned with the international risk management standards, such as the ISO standards. So both in terms of terminology, the processes, also some of the principles are now more and more aligned to ISO standards, which also, of course, means that if you are working in a company that are focused on ISO standards, by implementing the MRR practitioner framework, you'll also actually be more compliant towards the ISO standards and reporting structures and things like that. If we look at the whole scenario or the whole manual, there's some echo here, but the manual has been more turned towards also showing how to practically use the framework. So they've done that by implementing 4 case studies or 4 scenarios in the manual. And the idea is that when you read the manual, you'll have also some very close examples. And the 4 examples or the 4 scenarios are, very different companies. So you have a tax department, you have financial a company, you have a globally logistics company and things like that. So you'll actually have, a very big variety of different examples that showcase how you could use and how the different tools and techniques can be applied to various companies and scenarios, which I think is helping the readability of the manual. So I think in terms of that, it's more turning into a learner book rather than just a place for you to look up terminology and key terms and things like that. It's still, part of the PeopleCert and Axelos framework. So you still have accredited trainers and consultants, which means that if you take the course, you can be certain that the accreditation or the trainer that is doing the training is accredited, and that the certification is also globally recognized. The MOR framework is complementing both the Prince2, the Prince2 Agile, and MSP certifications. One could argue that it also complements the management of portfolio, because what risk does is that it has different perspectives, and we will come back to that, but it actually works not only on projects and programs, but also on whole portfolios and operations, so daily work, but also on a strategic level. That's actually a core part of the framework, that it should be applied not only to parts of an organization, but should be able to be applied to the whole enterprise. So we're moving into more of an enterprise risk management setup rather than a project and program risk setup. If we take a look at the framework, as I also wrote on this slide, it's not just project, it's a fully integrated enterprise risk management framework. And the idea is that it should match the context and culture. And by that, the statement is pointing towards a culture and context looking at the operational level, for instance, on the factory floor, is very different from the culture and context that you would normally see in, for instance, the admin part of an organization or even the leadership part of the organization. So the idea is that the different perspectives also allow for different ways of looking at risk, but with a common and shared understanding on how do we map out risk, how do we make this risks visible, and how do we make sure that we make the right decisions. And the whole purpose of the thing of the framework is, of course, to build confidence so that we can overcome what in the manual is called the VUCA, the volatile environment. So basically build confidence that we know how to handle unforeseen things that could happen in a structured manner, all the way from a very operational level all the way up to the strategic level, using the same terminology, using the same approach to risk and things like that. It actually strengthened the common culture. So culture is also becoming a very big part of the new framework, and there's a whole people layer that is now incorporated in the framework. So if you look at the figure here, you'll see that the whole framework is basically consisting of 4 layers. You have the perspective, which is basically where in the organization are you looking? Are you part of a development setup, so program or projects? Are you more like a strategic level, so portfolio or strategy? Or are you more on the operational level, like products and operations? We'll have a look at those a bit later. Then you have the principles, which is basically outlining the mindset. And one of the key observations, and we'll come back to that, is that risk management practices is not so much about tools or skills. It's actually much more about having a mindset of understanding that uncertainties is a natural part. We'll never be able to remove all risks, but we can make ourselves, likely to understand uncertainties and take them into account when we make decisions. So the principles are basically outlining a part of the mindset. And I'll dive into all of these 4 rings during the presentation here. Beside the principles, the whole people layer, and this one is new in this version 4 of the framework. And actually it's about how do you implement a risk management mindset? How do you make a good risk supportive culture around risk? How do you work with biases? And this is particularly interesting because biases is something that we tend to look at things with a certain view, and we might be blind that this actually will lead to some risks that we are not mapping out the right way. So the whole people perspective, including working with biases, is a very valuable add-on, I think, to the framework that certainly will help to implement and understand it in the organizations. Individual competences is of course part of it. Understanding how to do risk. It's also focused a lot about facilitation and things like that. And then of course, and this is more like almost obvious, risk is not about just working with the systems or methodologies. It's very much about the people part. And Esben, yes, I will give you some examples on how to work with bias once we hit that slide. So yes. If you look at the framework and the basic or the foundation of the framework, then value is at core. It's almost in the title. We are creating and protecting value. And by value, it's not only the profits or the monetary parts. It's actually about the perceived benefits. So one prerequisites of working with risk is actually that you need to understand your either strategic goals or project goals and so on and so forth. So it's not about just mapping out something could happen. It's about understanding what benefits are we hunting, and then adding to this that we have a proportion to the resource deployed. So one of the core things that they've introduced in the version 4 is that risk is not about blindly hunting all uncertainties and dealing with them, but having a value perspective. Can it be justified that you allocate resources to deal with a certain risk, or is the risk impact perhaps not that big? So it's better just to perhaps monitor it or accept it as it is. So the value term is quite important in the new risk framework. So it's not about mapping out everything. It's about focusing in on the things that mostly threatens your benefits or perceived benefits with a reasonable amount of resources. And this actually introduces some sort of business case in which risks are worth dealing with and which risks are not worth dealing with. This actually creates some quite interesting discussions because previously, at least in my experience, risk is about mapping out and making sure that we understand all the uncertainties, while the approach in the new framework is more like, yes, you might need to understand everything, but deal with the ones that has a reasonable business case. And this actually creates quite an interesting perspective to working with risks. Another key term is resilience. So resilience in the sense of ability to deal with unplanned events. So dealing with risk is often perceived as one case at a time. So you see something and you try to mitigate on that one, either by preventing it or by having some contingency plans and so on and so forth. But the resilience term or way of looking at it is actually on an overall perspective. How do you build your resilience into things so you are less prone to unplanned events? So it's not only about dealing with them, it's also about taking into account the design of things you do, either your corporate design or your project design or program design. So all this is actually, again, a new way of looking at things. It's not about dealing with issues or dealing with risks. It's also about how can you design things in a way so you are less prone to be needing to deal with unplanned and uncertainty. And of course, agility and agile ways of working plays a part of this. And if you look at the question from Esben, is that would mean you have to introduce tolerance threshold in the target KPIs on projects. And yes, tolerance, risk tolerance. So when is it worth dealing with and when it's not worth dealing with could be something as you would set out as part of the strategy or approach to risk, either on an organizational level or in each of the individual projects. So it's definitely introducing the whole value term is definitely introducing, what should you focus on and what should you not focus on. So yes, I would argue that in the old version, the version 3, you did have some of these thoughts already as part of setting up your risk management strategy, but it's becoming more clear that value is your sort of like weight that you use to determine what's important and what's not important. Resilience is definitely related to disaster recovery planning, but perhaps you could say that's more on a company level or an operational level, because if you're good disaster recovery planning, that will mean that you have some plans in place that if things are happening, you are ready to do something. And if you do your disaster recovery planning good, you would also have some means to perhaps monitor early warning indicators and things like that. So the resilience is also that you need to take into account not only that you have a plan to deal with things should they occur, but also can you design your operating model, your ways of working in a way that is less prone to risk. So again, it's not only about dealing with the risk, it's also about the design of either your organization or your projects or your programs or your operational level. The design of that is also important in terms of building resilience to make you less prone to risk. And part of the resilience is actually yeah, exactly. Tsunami flood warning system is a way of preventing, or at least knowing that something is on its way. And if you look at the part of the resilience term, it's actually also connected to the to what they call respond strongly. And that's actually, you know, it's almost tapping directly into a disaster recovery planning part. So building resilience is about to how can we avoid making ourselves vulnerable to uncertain events, so build the resilience in that way. But also resilience is about if things go in a way that we are not foreseeing, we are able to respond strongly, and that's disaster recovery planning, contingency planning, all these kind of things. But these two key words are actually quite new in the vocabulary of management of risk framework, and they introduce new ways of working with risk, which is I would argue that my perspective is that it helps us narrow down the things. So instead of using a lot of energy of trying to map everything, we are focusing in on things that matters, which has always been, you know, one of my viewpoints, that we should really focus in on things that matters rather than having the broader picture. Not that the broader picture is not valuable, but it's not very workable. So having fewer things to really work through often gives you a better results than working with the many. And then one of the things in resilience is also turning adversity into opportunity. So basically, if you are vulnerable, if you are prone to something, you might actually turn that into an opportunity. And just a simple example is that normally when if you're very you need to buy IT equipment, and it's a big cost on your budget, just as an example. But you know that all IT resellers, they are likely to come up with good offers at the end of the year because bonuses kick in and things like that. So part of turning the problem of cost of IT equipment could be turned into an opportunity, saying, what would it look like if we planned IT procurement and IT buying IT equipment in December? Would that actually create an opportunity to get better prices? So thinking like we have a problem, is there a way to turn this into our advantage, is part of the resilience terminology as well. And again, it's a challenging way actually to work with the risk this way. But once you get the hang of it, it actually feels right, because it's all about not trying to put yourself in a mindset of dealing with problems, but actually putting yourself in a mindset of overcoming challenges. There's a big difference with these two mindsets. The triple bottom line is also something that has been introduced in this new version, and the triple bottom line is basically not just when we say protecting value, it's not just in terms of profit, it's also about people and planet. And another way of expressing this is the ESG So environmental, social, and governance criteria, which is becoming more and more common part of companies' reporting structure in their yearly reporting and things like that. So risk is also about, let's say you do something, or you don't have risk to profit, but you might have a risk that your organization is being stressed out, or your competences are evaporating because of knowledge strain or whatever. Those kind of things are actually part of now the risk scenario and are very explicitly mentioned. And also the planet part is, of course, tapping into the whole UN sustainability goals. I mean, setting heat records is almost a daily thing for now. So having planet impact or environmental impact is also quite interesting. Perhaps even if you look at AI and things like very energy consumption, a high energy consumption, is that the right way to do? And I mean, of course, scale is important, but it's quite interesting to force yourself into a mindset of saying it's not only about the money part, it's also about sustainability and people part. So this is also something that has been introduced in the version 4. If you look at the outer ring in the framework, we are looking at the 6 perspectives. And if we dive a bit into those, the idea is that the framework explicitly considers both similarities between, for instance, leading the organization and developing the organization and manage daily operations, but it's also looking about the differences. And of course, if you have a strategic perspective, it's more like a long-term development of the company as a whole, whereas perhaps the product perspective is more like, this product, do we have any risk? But there are, of course, dependencies. And this is part of what the enterprise risk management framework is dealing with. How does things work together? How do we establish escalation routes and reporting lines? And how do we connect that a certain strategy might introduce new risks to our products or our ways of operating? These are quite interesting, and I actually recently had a session with the Danish railroads where some of these were actually quite visible suddenly. There's a big program ongoing with changing the whole fleet of trains, and some of the operations is, of course, how do we drive the trains today? And strategy and operation meets, and that it actually introduces some risks on when do we put things into to operation and how do we do it and things like that. So it opens up the eyes that risks are not isolated to a certain level. It's actually propagating through the whole organization, which again introduces some new ways of thinking. So the 6 perspectives are sort of like, we look at the same methodology, we try to implement the same culture and terminology, but we do it on different management levels. Quite interesting also. Then the next layer is, of course, the principles. And if we look at the principles, the statement is that they are universal, self-validating, and empowerment. And I mean, you can always argue about the wording here, but the idea is that the principles are trying to outline a certain mindset, a way of working, a common understanding of things. And in that sense, the principles at heart are basically aiming at, it costs less to manage a potential threat than recover from an issue. So that's at least the assumption, and I think it holds up, that if you try to focus in on doing things early, it's better than having a rush to try and fix a problem that already occurs. So the principles are aiming towards how can we make it part of the mindset that we try to deal with things before they become issues. The other thing, which is also quite interesting, is that positive risk, and this is part of the framework, and I think most of you also understand and know this, that a risk in this context is divided into threats and opportunities. One is, of course, something we would like to avoid or reduce, and the other is something we would like to exploit or even enhance. And the positive risks tend to be underutilized in the bigger picture, and it might be okay to some extent if you work in projects and smaller work, daily work. But if you look at a strategic level, then perhaps then suddenly opportunities become much more important. And if you think of it, think about it, most projects or most initiatives on the developing the business is actually a response to either a threat or an opportunity. So in that sense, working with risk on a strategic level is actually giving you input to how do you develop your business. And this is what the enterprise risk management framework is aiming at. That risk gives you input to which parts of your business is to be developed, and how does it do as a response to, for instance, an opportunity. We might be able to increase our sales in the Far East. Okay, that's an opportunity. How do we do that? By perhaps establishing a sales organization, training people, working with partners, whatever. So the positive risks that they are spotted, seized on, and capitalized on, predominantly probably on the strategic level. And of course, this is a statement, that we probably know at heart that this is true. Investment in risk management are expected to provide a tangible return for the organization. So let's not invest, and it's back to the whole business case view on the justification part, the value part. So we do not invest a lot in risk management if we cannot expect a tangible return either in effectiveness or efficiency. So the principles are not only aiming at doing things right, it's also about doing the right things. So the principle is actually, again, incorporating the whole value approach and trying to put a mindset around let's do the right things and let's do the things right. Both of those are incorporated in the risks. If we look at the people part, which is the new one of the new items or inputs to this version, the people part is basically starting with the statement, all people see risks differently. And I think that's a very key statement, because all of you that have worked with risk, if you enter a room and ask, which risks do we have here, people might be able to come to terms and agree on these are the 5 key risks. But if you start asking them, how do you see this? How is the likelihood of this occurring, or what is the impact if it occurs? Then people start to look at things in a different way, and it's natural, because we might have different backgrounds. I might know a lot about production, so to me, a risk that relates to production setup is small, because I know exactly what would happen, and I know how to mitigate it. So to me, it's small, but to someone who's not familiar with the production setup, it might look like a big problem. So understanding and accepting that people see risks differently is actually a key in building the right culture. And if we look at this risk culture part, the idea is that culture is a mix of working with, you need to have people collaborate. You need to have a supportive culture. So basically saying you found something that you deemed a threat. That's great. How do you see and why do you see? Rather than, I don't want to hear all your risks, because it's very annoying that every time you talk to me, you come with a new problem or a new risk. So the supporting culture is about encouraging people, but with the value mindset. So basically make sure that you're not wasting time saying meteors might fall down on Earth. That's great. But it's not that really important. The value of setting up meteor monitoring systems are not really proportionate to reducing the risk, or perhaps in this case the chance of us being hit by one. So support is part of it, and recognition. So recognizing that people are doing their best, and then of course, and that's the key, and it's elaborated further on in the manual. Of course, how does then leadership bring these three corners together. But what is important is that we are not only talking about system and implementing a process, a set of principles, and so on. We are changing the way we look at things. We are implementing new culture, and to that extent, implementing risk is now a change effort rather than methodical or principle implementation. So just also going back to the question, working with biases. So one of the biases that is explicitly mentioned is this decision bias, and that's the inherent tendency to adopt a mental shortcut. We know that someone did this, so we also do this. Or the cognitive biases, which is we don't always know what we don't know, and if we don't recognize that part, we might think we know everything, and then we start making decisions based on that. So working with the biases, an example could be that we, in order to have a good risk culture around biases, it's important that we accept perhaps that there are areas that we don't know. So it's almost like before you can work reliably with risk, you also need to understand your own constraints and limitations in your ways of working. And there are a number of biases, both listed in the manual, but also ideas on how to approach these biases. But biases is what leads to faulty decisions. So the way to deal with it is to create transparency, making sure that we understand the connection, for instance, between cause, event, and effect, things like that. And since working with bias is very much about tapping into the mindset of individuals or decision makers, it takes time. And since it takes time, you will also naturally need to limit the number of risks that you really work with. And again, it goes back to the value proposition. So we work with things that have a likelihood of creating value to us. So part of what we are working with in the book and some of the specific techniques are based on how do we create a conscious awareness versus the unconscious awareness or even non-awareness that is conscious. So we know that there's something we don't know, but we ignore it. That's a very dangerous bias. So there are different techniques introduced in the manual to how to deal with this. Independent input is another one. Reframing is a word they use. So basically, okay, it appears that people do not understand the real dangers of this. We need to reframe it in a way that people understand this. So there are specific techniques addressing the inherent bias. So it's not about removing the biases because they are there no matter what we do. It's about dealing with them and trying to adopt the risk transparency towards those biases. If we take a look at the individuals, of course, skills is important, and the manual is using a standardized framework for how to deal with competences. So it's about attitude. Some would call that mindset. The knowledge and experience, some would call that a kind of, and the skills a kind of a tool set, and a skill set. But what is lacking, and that's perhaps illustrated by the black square behind, is also that tools are part of this. And I hadn't put it on this slide, but working with competences is all about knowing and understanding why I should do it, having the skills to actually do it, but also having the means to do it. And this is where the manual also introduces techniques and tools. So it's now, I think, aggregated to a higher level of impact, I think, because in the previous manual, it was, here are some tools, but it didn't really take into account, so how do we make sure that these tools are understood and used in the right way? So working with individual competences and understanding that as part of the risk framework, again, I think added a great deal of value. So the whole people ring actually is a new part and a new introduces some new ways of looking at risk, which I think is quite interesting. And you can even, if you work with the agile ways of working, you can incorporate these into, without doing a formal risk approach. You can actually work with these things, for instance, inside a sprint. And again, it's more of a mindset than it's necessarily a lot of tools and skills. So I think this working with individual competences, working with biases, working with risk culture, actually brings new dimensions to the risk work, which I think is quite interesting. And without going into details, the manual does have some good examples using the 4 scenarios of how to use this. The process cycle is as it's, I mean, it's identical to what has been around for some time. However, in the old manual, it was a 4-step, but actually in 2 of the steps, there were 2-part processes, if you like. So they now expanded that one. I would say, okay, we need to go through all the 8 steps, and it's a logical way of working. The real important part here is that this is not something that you do, for instance, before a phase is starting or before a tranche is starting. This is the mindset that you need to have. So it's a continuously rolling understanding. So if you are working, for instance, in an agile setup, in a Scrum setup, you would actually incorporate this as part of your sprint start and also the retro, perhaps. So it's a way of working through a certain thing, a certain set of questions. And I mean, if you look at it, it's fairly logical. Define context and objective is understand where you are and what are the objectives. So objectives is the key word here. Identify what actually the threats and opportunities are, prioritize them, assess the combined picture. Are we having, one thing is that we have small issues here and there, or small risks that we need to deal with, but what is the bigger picture? Is everything in red? Then perhaps we have a different scenario. Agree on contingencies. So what do we need to do? And this is where the value proposition is really important, because we might have ways of dealing with them, but it's quite cumbersome. It's quite expensive. It takes a long time. So we might opt to not do anything, but then that's a decision that we need to then make transparent. Monitor on the progress and review and adapt your whole approach. So there's nothing, it's not new physics or new revelations or anything. It's more like, let's make sure that we have a common understanding. The great thing about this is when you combine it with the perspectives, then suddenly you have a same way of working, a same way of going through threats and opportunities, both on the strategic level, but also on an operational level, meaning that you can use this to create, a common vocabulary, a common set of terms, a common set of tools that, even though they are used in different perspectives on different levels in the organization, you can actually suddenly crossbreed, bringing in guys from the operations or productions into a leadership room is easier now, because we already have a shared vocabulary. So this actually helps building the culture again, because we share ways of working, ways of describing. So having these processes propagated against the 6 perspective is something that helps implementing the risk setup. We did just talk about the format in the very beginning, but with the introduction of this new MRR, they have actually no longer a foundation level. So there is only a practitioner level exams, which I think it's fine in this context. It's fine because understanding enterprise risk management is actually not a theoretical exercise, which the foundation level used to be. So understand the terms, understand the processes. It's actually about doing it. So in that sense, only having the practitioner level, where you use scenarios as the foundation for the exam, seems more appropriate, because it's not about writing or reading stuff or doing large handbooks and things. It's actually about working with the culture, working with the people, and things like that. And so it's much more oriented towards implementing and doing risk, and rather than having a great theoretical foundation. So in that sense, I think it's great. It also means that the 4 scenarios in the manual are actually the scenarios that you are that they are using in the actual exam. So again, you instead of having an exam where you suddenly are introduced to a completely new scenario and you need to get your head around that one, you actually you can prepare for the exam because all the scenarios are also described as part of the manual. So it becomes more, the exam is not completely disconnected from the manual as it was before. I think it's much more integrated. So it feels like you are now being examined in the actual way of working with risk, which I think is good. A few observations from real life from and I could actually, this is quite interesting. I could have filled out this session with observations, but so I really try to dial in saying what is really something that I think matters, and I think good practice is a matter of mindset. I've seen organizations that have a very detailed and well described handbook of risk that are not doing risk at all. On the other hand, I've seen companies that have no formal instructions but have a mindset of being cautious. And some business domains almost have this. For instance, if you work in the oil industry and you work on oil rigs, there's a whole setup around this. They both have formal description, but the mindset is also quite interesting. So mindset, I think, creates more value than just the skills and tools. Not saying that the manual is not important, that it's not necessary to learn the techniques and approaches, but working with culture actually brings more value. And in that sense, I think it's great that we now have the people part of the framework. Creating a level playing field and common understanding is essential. I mean, if you have islands of great understanding inside an organization, nobody is really benefiting from that. So having sort of like a panel of risk experts, it's almost like you press a button and then you get some results out. But since it's part of the real value is the mindset, it actually isolates the working with knowledge. So I think creating a broader understanding, and perhaps by simplifying risk in the beginning and then slowly building maturity over time, is a much better approach than establishing a set of experts. So level playing field and common understanding is key. Proximity matters, and this is more like note to self. A lot of the time people are discussing the right risks, so they are discussing the right things, but the time perspective is wrong. So they are using all the time of discussing big things that could happen in the far future. So making sure that you have the time perspective as part of your discussion is important. And then Pareto rule, the 80-20 rule, and this is actually the value proposition they are introducing here. Focusing on the very few, very important things is much more important than mapping out everything. And it just shows itself again and again. And one of the reasons for that being important is actually the next bullet, mitigation. If you, I guess you all have these fine risk logs or risk registers, where one of the fields is now describe your plan or mitigation actions, and then we have very little space to do that. So we tend to I will avoid or I will reduce, but that's not it. What we need is a plan, and since we have many risks perhaps identified, we cannot make plans for all those risks. So the risks that are really worth dialing down on or reducing or avoiding, let's make proper planning for that. And everyone knows that proper planning actually takes time. So one of the things I tend to try to do is to perhaps not ask people to make great plans, but ask them to have a mindset, okay, so what if you need to go shopping? Wouldn't you do sort of like a shopping list? So I will first buy this, I'll buy this, and I'll buy this. That makes it possible for me to do this, this, and this. So have this mindset of saying, do at least a list of things that you need to do. And that alone puts, it's not one line, it's at least a couple of lines with some time perspective, some things we need to do, some dependencies mapped out. So working with mitigation is actually the the most difficult part in all this. And then this is one of my hobby horses. Monitor is not an action. If you have a brick coming towards you, don't just look at it. You'll get hurt. So monitor, step away from that. Monitor is just an excuse for not doing anything. Risk is about doing something. So keep that in mind. And implementing ERM, as is described in this manual, is not a simple thing. It's actually a change process. And here we have different methodologies. I've put in MSP, the managing of successful programs, so which is actually focusing in on how do you implement new ways of working, new processes and things on. All this is just saying that enterprise resource management is the right approach, but it's also introducing the need for working with risk as part of a change setup. If you use MSP, fine. You can also use different methodologies. And if monitoring is not a mitigation, it's only acceptance left. Yeah, it's actually true. So monitoring, yes, that's fine. Of course, we can keep monitoring, but let's be clear about monitoring is not removing, it's not doing anything to the risk. The risk remains. What we can monitor is how the risk develops, and that's fine. But we're not doing anything. So if we really can settle for just monitoring, we are actually accepting the risk as it is. Then perhaps the project manager or the risk manager or whatever might have a note to self, let me keep an eye out on that one. But that's not an action. It's just, I'll just keep an eye on it. The action is either do something about the risk or accept it as it is, because it also sort things out. At least that's my perspective. I think it would be a bit too optimistic to attribute that to the manual, because that's my way of working, right? And one of the things that it becomes very apparent when you work with enterprise risk management approach is that suddenly rules of escalation and consolidation is important. Many years ago, I worked with the health platform in the two Danish regions, a very, very big program. And one of the things that we observed was that risks from project were very easily escalated to the program level, which means which meant that on program level we suddenly have more than 3,000 risks to deal with. Nobody can deal with 3,000 risks, right? So suddenly, how do we escalate between the different levels in the enterprise risk setup is becoming important. So rules on how do we escalate, and also what are the scales we are measuring things on becomes important. So those are just a few observations, and I'm sure you have many more. And the interesting thing is that going through the new manual triggered some reflections, I think, mostly around the people part that were quite interesting. So these are just this is just an appetizer on the manual. Of course, having half an hour is not allowing us to dive deep into it, but I do think that there are some new and interesting things introduced in this that could benefit, that many levels in the organization could benefit from. So with this, I will just say thanks for listening, and I've tried to deal with the questions, but of course, if anyone has any questions, please feel free to put them forward now. So I just saw that this one is there. Also an MRR, a guideline approach on how to define the scales. To some extent, yes, but this is actually it's stated you need to level out the scales, but how you do it is not apparent. I do have some examples of how to do that, and mostly I would say you have categories of risk. For instance, you might have financial risks, you might have risk to partnerships or whatever. So whatever risk categories you have, define the scales for that. So for instance, for financial risk, it might be that anything below 1% overrun is considered a minor impact, whereas anything above 5% overrun is a major impact. But I would have not one scale, but multiple scales, at least one for each of the risk category areas. Yeah, I think that's it.
There was also a question earlier about where in the process do you build the capability you need to deal with risk mitigation?
Yes, yeah. So since it's an enterprise approach, building capability is actually not incorporated in the process because it's about dealing with the actual risk. So this is where you actually move into the change management approach. So if you want to build a change culture, you actually need to say, okay, what sort of culture do I want? What is needed to build that culture? And if one of them is to build capability, you will have activities saying we need to have people on courses, or we need to have doing better handbooks or whatever. So this is actually where you dive into the change management approach. So it's not directly in this manual, but it's part of a change methodology. But it's definitely a very, very interesting and very relevant question.